Welcome back to the Monocle Banking Podcast, where we decode the future of finance and payments this week with the industry's most forward-thinking leaders. Now, payments are the invisible force really powering the global economy. They shape business, they dictate financial inclusion, and increasingly define the relationship between businesses and consumers. And nowhere is this transformation more critical than in South Africa, where cash, sadly, remains dominant. Yet digital payments are surging, fintech is challenging the old guard, and real-time payments are becoming a reality. At the heart of this revolution is Yoco Technologies. It's a company that started with a really simple goal, helping small businesses accept card payments when banks wouldn't serve them. And fast forward to today, and Yoko has grown into a payments powerhouse, pushing the boundaries of financial inclusion and fintech innovation. And now Yoko's co-founder and CEO, Katlego Maphai, is stepping into an even bigger stage, leading the launch of ASAP, which is the Association for South African Payment Providers. It's a new industry body, and we had the pleasure of chatting to Lincoln Marley about that a couple of weeks ago. So today we're going to be exploring a little bit more about Katlego's career journey, how he went from finance to fintech, and why ASAP was launched, what it means for the future of payments, and this painfully slow transition away from cash and what it means for merchants and consumers in particular. So let's get into it. Katlego, welcome to the Monocle Banking Podcast. Great to have you on. Maybe you could just take us back to the beginning. What was that path of yours into fintech and payments? Was there a defining moment that inspired you to co-found Yoko?
Hello, Michael. Very happy to spend time with you, and hello to everyone listening. So the path to Yoko was quite interesting. I grew up between South Africa and the United States, got to do a lot of context switching when I was younger. Also had a bit of time in the Silicon Valley when I was younger, just when the web browser had come out in the mid-90s. And so had a very early passion for technology. I studied at the University of Cape Town, where I majored in information systems, and then started my career in management consulting, where I worked in the communications and high tech space, spending a lot of time with telcos across Africa and the Middle East. I guess the genesis towards Yoko was a couple of things. One, just wanting to do something entrepreneurial, to apply myself to an interesting problem with interesting people. The second part was seeing this, acceptance model, mobile point of sale model proliferate in the US and also Europe, and just seeing the impact it was having on small businesses. And then I guess when we started looking at the numbers in South Africa at the time, I think it was like 2012, there were only 250,000 businesses who could take a payment. But, 7 out of 10 consumers in South Africa had a card in their pocket, through the banking system. We found that gap weird and unacceptable. And when we double clicked, we found that it was just inordinately difficult to get a machine. You had to sign a contract, there was a monthly fee, you had to commit to minimum volumes, all these hoops. And I guess coming out of the telecom space where, you bought a mobile phone, you got a SIM card, you recharged, and you could do this, within a couple of hours, and you could make phone calls. We saw the business models as being identical. So, using a piece of hardware to access a network and, doing something on that network. And our thesis was, if we could make getting a card machine as simple as getting a cell phone, we could really unlock the market. And that really was the genesis of Yoko between me and my co-founders.
And it's a remarkable journey that you've been all the way from Palo Alto back through UCT. You were also, what was it, Delta Partners, I think, at that telecoms
Yes.
firm, and Rocket Internet, which I think many will know the name Jumia.com in Nigeria, one of Africa's largest e-commerce platforms. So you've really done and seen an awful lot. You launched your first transaction, when was it, 2014?
That's right. So I'll never forget that day. It was October 2014 when our first transaction went live. And then 2015, we were pretty stealthy, to be honest, just really focusing on nailing, the customer experience and journey, making sure that, customers could set themselves up. That was really the key unlock, was that somebody didn't have to come see you to set you up and onboard you and for you to use the machine. And then end of 2015, we officially launched the company with about 500 merchants coming out of our beta program. And yeah, since then, we now, serve over 200,000 merchants across the country. And we're very proud of that. And I think importantly that it really is across the country. So we're not just in the urban centers, but 1/3 of our base is in what you would classify rural areas in the country. And that's really been enabled by the fact that, through e-commerce, nationwide delivery, and self-setup, we really created access.
And when we talk about financial inclusion in South Africa, I think this has got to be one of the most important pillars. There, it's a four-legged table, but certainly, opening access for merchants and transitioning away from cash has been difficult. In South Africa in particular, cash is still very sticky. I think the recent SARB report released by Tim Maselo shows that still fully 50% of people go and withdraw almost all of their money from their bank account as soon as it hits their bank account, and they prefer transacting in cash. That's been your mission at Yoko, about democratizing access to financial tools for SMEs and transitioning away from cash. What have you learned? What has been the biggest learning in helping small businesses adopt digital payments?
Just looking back and just coming to the simple truth that a payment, is a representation of a transaction, right? And what is the economy? The economy is the sum of the transactions that happen in it. So that's what a payment is. It's really the vital data point on what's going on inside the economy. And the challenge is that when things are happening in cash, you are not really getting visibility into what's happening. And then alongside that, for the business owners, they don't really exist, right? Because they don't have verified records. So it is fundamental, this digitization process. And we've seen the impact of moving folks from cash to digital, and all of a sudden they have records of what's going on inside their business, and they can review those records, make sense of them, take decisions off that information. And then alongside that, on the basis of those records, they can now start getting access to working capital, right? Because we now see how much the business is transacting, and we can get them a bit of access to their future turnover at a bit of a discount. And then alongside that, this digitization, when you start looking at software and moving away from pen and paper. So you bring all of these things together, and all of a sudden, a business goes from being a little bit in the gray, not existing, on paper for all intents and purposes, to actually existing, having records and going through a formalization journey. And then alongside that, being able to grow and changing their relationship to the economy. So we believed in this. We kind of knew this to be true, but actually seeing it play out and seeing the transformation of these businesses and seeing them go on a growth journey has been quite remarkable.
And it's been a big, I think, revolution in the way one provides access to credit through understanding the transactional data of a particular merchant, and why traditional banks have tended to steer clear. And you found these alternatives. There's another one, Merchant Capital, that I can think of as well, that really effectively turns thin file into thick file customers of these SMEs. Hugely rewarding that, in that what you're doing by enabling that working capital is really you're unblocking the economic arteries of the system, and you're allowing capital to flow, and the body economic thrives as a result of that. Yet, we do still have, in terms of the overall payment system, a regulatory environment that probably could be more conducive. I mean, if you look at markets like Brazil or India, which really have been, revolutionary in the way they've opened up access to digital payments, South Africa still seems to be some way behind. How would you describe the state of financial inclusion and payments innovation in South Africa today? Are we making real progress, or are these legacy systems and relationships holding us back?
So there's two parts to the answer. On the one hand, through these third parties, non-banks who've come into the system over the last decade plus, and have found a way to, in an economic manner, reach these new segments where there's been an unmet need, and have such created access and a marketplace that didn't exist before. And it's very visible, right? So it's not in the background. All of us engage with this new class of merchants every single day, whether you're going to the barber, the trading, going to a market, or etc. Right? So I think that's been amazing, and a great example of what happens when market fundamentals allow for new industries and new spaces or new segments to be tapped. And venture capital has flowed into these companies, and that's been overall very positive. I think the other part of this question is, where are we in terms of regulation and really opening up participation for these third parties, which we're one of? And I guess the reality of the matter is we're still, for the most part, having to partner with incumbents in order to move forward, which, is normal. You see this in other markets. I think what we would love to see is a true opening up, kind of a leveling of the playing field. This will allow for even more innovation to proliferate, more segments to be pulled in, and a faster path to full digitization across the economy. The challenge is if this opening up doesn't happen and economic models start getting challenged, then the consumer and merchant is going to be left off in a not so good position. And it's very important that we keep up with global trends from a regulatory standpoint and that we really kind of respect where we are and what the market needs today, and also hold true to like this grander vision and really make sure that from a strategic perspective, we're really taking the right steps in terms of taking the full industry along on the journey without, leaving kind of incumbents in a position where they have, undue advantage, right? Just due to their positioning. So you really want to allow competitive dynamics to play out that benefits all, but there needs to be a level playing field.
Absolutely. And I mean, one just needs to look at the energy industry for a really good example of what happens when you have incumbents in critically important
Correct.
monopolies,
Yeah.
and why there was the move to restructure ESCOM, unbundle it, say, right, you can go and you can be a generator. There are some natural monopolies in the system, but it is about leveling the playing field, allowing other IPPs into the system. And so far, we've really managed to attract a lot of investment into IPPs. And similarly, you want to see a level playing field in financial services. Globally, we've seen regulators stepping in to mandate open banking and secure the data sharing frameworks. If you look at the UK and Europe, they've got PSD2. Even in Kenya, regulators are taking steps towards structured open banking. Do you think South African regulators are moving fast enough, or is there still a lot of foot dragging in favor of the incumbents?
I would say we need to move faster, and not for the sake of moving faster, but just more related to the fact that we've been in a low to no growth context for the last decade plus as a country. And it's critical that, from a policy perspective, across the whole economy and, in our own space too, that we're taking steps to open things up, to foster the marketplace and to ensure that there's dynamism being incorporated into the economy. This is fundamental. And so I'm speaking even at a higher order here. And in that sense, urgency is critical. We really need to move. This is fundamental.
Beyond the banks, if you look at South Africa's payments infrastructure itself, it is controlled by a few key players. You've got PASA, the Payments Association, BankServe, and the Reserve Bank. How much of the problem is the banks, and how much is it the underlying payments infrastructure that is simply outdated and favors incumbents?
I think our challenge is we were a closed economy for quite some time during sanctions. And as such, we operated in a very particular context, which was quite organized and people getting around and, really trying to work through how to deal with the underlying constraints of being a closed economy. My view is as we look ahead, there has to be an open orientation and a movement beyond the safety of the incumbents. I still feel there's just that underlying culture and feeling around it that almost anything that's non-incumbent needs to be examined through the lens of risk primarily. And I get that. Obviously, we need to do that. But there's another part to it, which is we need to manage risk, but we also need to drive growth and inclusion. And I would say that the growth and inclusion urgency needs to be a lot more dominant than the risk orientation. I think this will allow us to move faster. From an infrastructure perspective, like we have everything we need, it's all there. We have world-class infrastructure as a country, but the question is, how do we allow for open participation within this infrastructure and move away from some of the barriers that exist where there may be a little bit of gatekeeping in some of the context. So this is very important and this is very much higher order. It's about driving growth
Yeah.
and the like, but it's kind of moving away from being anchored around this risk orientation.
I know one of the arguments, and you mentioned risk, that banks often use is that fintechs introduce more risk into the system. But I was chatting to the CEO of True ID the other day, and he claims there's never been a fraud incident in 9 years of payment screen scraping. So, the fraud narrative, it sounds enticing, certainly doesn't seem to be backed up by a lot of the evidence that we're seeing on the ground. Some banks like F&B appear to be making moves towards commercial APIs. Do you think we'll see more of this collaboration, or will banks only cooperate if we see some kind of regulatory intervention?
To the risk question, I completely agree with you. In any context, you could have some bad actors and they need to be dealt with. This is normal. And, as a country, you need to have a mechanism to deal with these situations in an effective manner. But for the most part, you're dealing with good actors. And in addition to that, when it comes to the fintech story, I think there's two things. One, we're all very grounded in data. We had the benefit of building these platforms with next generation technologies, which allow us to be data first. When you're data first, your ability to deal with risk is completely elevated. So this is very important. And my view is just historically, given the nature of the market, I do believe we need to move towards a mandate. This is fundamental. Open banking is really important. It puts the power back into the consumer and gives them control over their financial information and how they want to participate and engage with other players. And I see this as a fundamental right that needs to be supported and guaranteed by a policy framework.
And what would that mean for Yoko and for other fintech players for that matter? How much more could you innovate if data and payments access weren't a bottleneck as it is currently?
Well, let's bring it down to the customer challenge. We deal with a segment that's small, right? From a turnover perspective, like our core customer is trading between 10,000 and 200,000 rands per month in turnover. Right? And then if you distill that to how much cash they're actually generating, having to pay salaries, all these things, these business owners have very, very limited resources and they need to be able to work within that. Now, if you can imagine you're working on your product and your service, you're serving your customers, you're trying to retain your customers, all these things. This is very much the core of your business, but then you've got all these things in the back end that you need to attend to in terms of hygiene and keeping the business running. And what we see is a data fragmentation. So information sitting in different pockets, whether it's where you process your payments to receive income or to accept income, where you make your payments to pay suppliers, staff, utilities, rent, and where you receive your credit from. All these things are data points that are generally sitting quite fragmented. And often with these business owners, they're spending evenings and weekends just trying to reconcile this information to get to some sort of a picture of where they stand as a business. And when you don't have open banking and these types of services, you're compounding this issue, right? So it is really important that business owner is able to quite quickly reconcile these data points so that they can get to an accurate financial picture in the easiest possible way of what's going on with their businesses. And this is very powerful because this will minimize a lot of what I call non-value adding critical activities in the back end of a business. Will allow technology to take care of these topics, and it will give these business owners back time to focus on the value creating activities in their business, which is working on their products, improving their services, engaging their customers. And that's the way we see it. So that's the underlying thing where openness helps to solve.
Absolutely. And as you say, it's a higher order issue than just, one or two companies or a war between banks and fintechs. We're going to be committed, as the president said he was when he hosted Jack Ma back in 2018, to making entrepreneurs our everyday heroes. This seems to be a very politically easy win in terms of moving the system towards something that is more inclusive for SMEs. Let's just, as we conclude, Katlego, talk about this transition away from cash. And in your opinion, we keep hearing that cash is king. We know it's expensive and inefficient and has security and all of these other costs associated with it. Why do you think South Africans are still so reliant on cash? And how do we start shifting the needle? If you look at India, the Unified Payments Interface, UPI, reduced cash by, 30% in 5 years? There must be lessons that we can learn from transitions like that in kind of similar peer markets?
Okay, so maybe let me start by explaining why cash is so valued as a mechanism to exchange value. So one, cash is accepted everywhere, although that is changing, but all intents and purposes it is. Two, it's ubiquitous, so you can always put it to use. And then three, it's instant, right? So you're not waiting for it. You can put it to use almost immediately. In certain segments of the economy, especially the informal, this is really, really important. So you want to be able to pay everywhere, and you also want to have access to cash immediately that you can put to use because you're dealing with smaller basket sizes and lower values, and kind of that cash cycle is very crunched. And I guess even though people might be carrying cards in their pockets, if they don't have a place to dip that card or to take some sort of a digital payment, cash becomes a natural thing that they need to rely on. And then in addition to that, for the merchant, if let's say they're taking some sort of an electronic payment, but that money is only going to be available in the next or deposited into their bank account in the next 48 hours, but they need to buy stock or pay wages and all these things, or even consume utilities, this is problematic. So it is critical that from a digital payments perspective, that you solve for ubiquity and the ability to use that payment method in as many places as possible, and that the instant availability of that money is also enabled. These two things, alongside affordable fees, and I use the term affordable because, in the end, the system needs to be funded. People need to do the distribution. There need to be incentives. And if you kind of tend to zero, you actually start removing incentives.
Yeah.
And that is ultimately going to impact access, right? So you need to get to the right balance. But that's the key thing is, ubiquity and instant availability will drive digitization.
And would you say that that's really what ASAP's mission is all about? Just in conclusion, what's your vision for the Association for Payments and its impact on the industry?
So the vision, what I love about it is that it's actually just a continuation and formalization of what we're already doing.
Mm.
As companies separately, we are driving inclusion. We care about these things. And what's important is that we see high quality business models that actually solve a fundamental problem, right? That's always the zenith. What we want as an association is a level playing field so that we can continue this work and be in a position where we can drive these models forward in a sustainable manner. That's all we want. And that's really something we're all excited about. We're happy to come together despite the fact that we compete, but we're happy to come together on this higher order topic to really foster a level playing field for all. It's just going to benefit everyone, including the incumbents, in our opinion. Digitization benefits all.
That is the bottom line at the end of the day, that I think regulators should really be stepping in where there is real market failure to ensure that we can achieve that and then allow the market to compete and do what it does best. As anyone who's maybe used a Revolut or any of those other services in other markets that have made maybe greater progress, one can see the benefits are really quite tangible. Katlego Maphai, thank you very much, co-founder of Yoko, South Africa's
Thank you, Michael.
payments giant. It was great chatting to you on the Monocle Banking Podcast. Take care.